The naysayers telling us we weren't going to make it, from time to time, I'll be honest with you, I walked out there and saw that massive job ahead of us, and it just seemed to be overwhelming. But the state of the nation today, the state of the project today is that, as you saw as you rode around out there today, the digging is coming to an end in the first phase. The first phase is several thousand units. The first golf course is well underway and is slated to open up in the third or fourth quarter of next year. The first vertical is being planned now, and is planned to be some of it started hopefully by the end of this year, depending on how far along we get with the underground infrastructure work. The airport is reopened up. We've interjected ourselves into the community down here. We've set up a foundation that is funding future development for the West End, something that will go on in perpetuity. It's not something that starts and stops. We have sold several $100 million worth of property here to people who are going to build homes and become a part of this community, which is a foundation of the business plan that is different from the Jack Tar. There's one thing about the Jack Tar: it's a hotel, or any other hotels, a bad year they can close down. When someone buys a lot and builds a house and becomes a member of the club and pays money into the maintenance and the homeowners associations that they have, that is a stability that is spread among hundreds of property owners, not one operator with one business, that if something goes wrong in that business, the whole plan comes to an end. The rumors that are out there, there are thousands of them. Without going into every intricate detail of our financing, which I don't mind doing to some degree, but I don't know if I could stand up here that long without sitting down for a while. It's complicated. There's been articles in the paper about defaults under a CS loan. First of all, there is a loan in place. It is in default. It is not a bank loan. It was not a bank loan when they brought it to us. CS came to us and offered this from private investors, and it is on particular properties only. It's basically on that tract of lot, that tract of lot, this tract of lot, and that little tract of lot right there. In that tract, we sold about 200 units. But let me tell you what we did when we did this loan. First of all, we knew it was going to be a long-term project. We understood it was going to be there for a long time. We never want to say something that we can't back up, and we never want to sell someone something that we can't back up. We're out of business if we ever do that. So when we made that loan, one of the things that we did is we took $124 million in cash and put it into a bankruptcy protected escrow account for the sole purpose of finishing up development in those areas. We took $36 million and we put it in escrow for the completion of the first golf course. And then outside of that credit, completely unaffected by it, is the core property, the golf course core property, and all of the North Shore property in Old Bahama Bay. That represents something in the neighborhood of $200 million worth of investment, and it's all cash on our part. There is no loan on it. We have no other loans on it, and that's where all of the core properties go. So what we did was put it in a position to where, regardless of what happened in the economy, it's a non-recourse loan. It's by private investors who made a private investment in it. It's not a bank loan. It's not FDIC insured. It's not something that a bank put on their balance sheet and lent us the money. Individual companies made individual decisions, and that's what they decided to do. And if something goes wrong, and we're continuing to presume that it's not, but if something were to go wrong there, what I want you to focus on, without me going into all of the great details, is all the money to develop all of the facilities is in place. It's there now. It's in an escrow account. You can't get any safer than that. I mean, no developer takes that kind of money. It was originally about $200 million that we had to put up Today it's down to about 100, a little less than 124 into 36, and some of that's been spent on the golf course. It is a protected completion on that property. And everything else that's associated with the operating facilities, we own both of the golf courses and all the land for that outside of the facility. The harbor basin is outside of the facility. The hotels, the restaurants, the shops, the clubhouses, all of the things that it takes to run that property and Old Bahama Bay has no debt on it, and it's all funded by our equity, and it's going to, continue to stay that way as we get ready to go now into the vertical. This property, in 40 years that I've been in the business, I've seen a lot of financial structures on a lot of different communities, a lot of them very difficult. I venture to say I've never seen one that has got as much protection for the customers that are buying and a much commitment on the part of a company as ours is put up to assure that what we say we're going to do, we're going to do. Now, business is business, and tough times are tough times, and people are going to do what they're going to do. And naysayers are going to say what they're going to say. But at the end of the day, we're going to be in the Bahamas, and we're going to be on this piece of property for many generations to come. And there is virtually nothing that I can see now that would stop us from making that, to making that goal become a reality. And I don't know how much more I can talk about it.
The 200 lots as part of the loan, how many have been sold?
There's about 800 as a part of the part of the loan. 200 have been sold and closed.
So the lots attached to the Credit-Suisse loan are just 200 or so?
No, it's 600.
600. There's
about 800. There's actually, I think, 880, 860. 868, of which about 200 of them have been sold. Okay. So they have about 668 left.
So can you pinpoint any particular aspect of the work that's gone on that was attached to that money?
Well, all of it. I mean, the digging of the canals, and the digging and the mucking of the property, the water system, sewer system, power system, off-site costs that we had with Bahama Power, with it's everything. It was a line of credit, so it was used as we sold and paid the line down, we were able to draw the line back up again.
So the 675, how much? 200 million of it went to Grand Bahama in terms?
Oh, probably more than that.
How much?
I don't know off the top of my head, but I mean, look at the cost of what's gone into this community so far, and it's, there's at least over $300 million, not counting acquisition costs. That's $300 million in just work.
Where do you stand now with Credit-Suisse? Are they going to do what?
That I don't know. Here's the problem. Well, Credit-Suisse is only the sponsor. They didn't lend the money. There's 50-odd investors. They've got to get together and try to get 50 people and get 100% vote. That's why we put the money up. That's why we protected ourselves against a day like today coming. As opposed to your friendly banker, you go down and tell them this is what I'm going to do. Here you've got private investors, and that's more difficult, and we knew that could be more difficult. And so that's why we put the escrow up to protect us, because the last thing we wanted was something to stop out here. I mean, if we have the biggest investment of anyone here, but we also want to be sure our property owners were protected. So the people who have bought the 200 lots, we put in cash outside of the CS loan, funded by us, these escrow accounts to finish up that block of work. Now, at the same time, we're moving forward on the rest of the work that's on property that we own that has no mortgage on it at all.
But you've just raised another interesting point, which is that money in escrow is specifically targeted those properties under Credit-Suisse. And so the rest of the project, financing for that is where? With
us. There is no financing. We've added 100% equity.
I mean, in terms of finishing the development.
We're developing it. It's our. We're putting up equity.
With what money, sorry?
Well, our partners are funds. We've got funds in there. They put up, the equity to buy Old Bahama Bay and to develop the stuff that's out there now and buy it, and we're continuing to do that. We're not seeking financing right now. We're going to continue on with the dream we had and the vision we had. Our employees are informed of what we're going through. They live through it. We've got an open book policy here, which is something I don't think many people do. We have one that we sit down and we level with people. We tell them what the situation is. We have, I think, some 400 Bahamians now working throughout this community. Our percentage has far exceeded anything we were obligated to do by the government. And and things hold true to be what they are right now, this is going to become still one of the major employers in the entire country. I don't know how much more I can tell you. I'm open to the questions, and we left a lot of time at the end of the day to do that. But our sales are up, our wins behind us. We're excited about it. We are moving forward to the next phase of development on this community. You've seen what was out in the field. That's why we wanted you to take the tour out there today. And every project, every community, and particularly one of this size, is going to go through generations of ups and downs. We're going to go through it. This is not the first time I've seen it in 40 years. I've seen the economies come and go. I've seen them change, and I've seen developments change. But good properties, good, well-financed properties continue to reward people, and this is one of them that I believe is going to reward people for many, many years to come.